Welcome, ladies and gentlemen. My name is Sanjeev Advani. I am here to bring you real estate, property management, and construction news to help you invest better over the long term and learn more about the markets. Today, we're going to be talking about commercial real estate and the debt crisis that we have. And so, going into everything here, basically what we're looking at is about 20% of the commercial real estate properties, and that includes commercial multifamily as well. It looks like about $929 billion dollars, according to this article, will mature this year. And so what essentially that means is that if a loan is maturing, you are going to need to refinance that property, or you're going to need to get rid of that loan by selling that property. Um, Essentially, what's going to happen is that you have about 20% of the outstanding debt on the and multifamily sector are going to be called this year, which means that you're going to have refinances and you're going to have sales go through, right? And so because of that, now a lot of people are a little bit worried because um, what's happening is that you've seen the values of these commercial real estate properties go down over the previous years. And so the volume of the actual loans which are coming due gone up about 40 to 50%. It's crazy because anything really to go up 40 or 50% is quite a bit, right? And so essentially what you're looking at, what's going to be happening with the Fed, right? And so that's really going to determine a lot about the commercial real estate sector and the commercial multifamily sector, because if the Fed says, well, still got inflation, got to increase those rates, then what you're essentially saying to these people who have these loans coming through is, okay, you have to negotiate with my current lender to be able to say, okay, I need to be in where we're at, but I can continue moving forward, or you have to refinance that. But if you're refinancing at a higher rate, then that can oftentimes lead to big complications, especially if your payment's going to go up and you already have a pretty low margin to begin with. On top of that, you also have that the sales, right? So now, for example, if this person purchases property, they purchase the property properly, then they won't be able to get out of the property what they put into the property, or ideally, at least they'll be able to break even. And so there won't be really too much of a crisis at that point. But do see that this is something that is coming. And so a lot of people are going to be looking at this to see, okay, how are the markets going to be moving forward? Right. And so volatility, uncertainty, this is all stuff that's kind of in right now, especially with those interest rates, because if we're not able to bring those rates back down into a reasonable range for the commercial real estate market, then that can really cause problems moving forward for everybody else. So, for example, you saw kind of the same thing with the New York Community Bank, right? And essentially that bank, right, is starting to see problems because they had picked up another bank which had issues their loans. On top of that, their oversight was not that great as well, it looks like. And so now they've got a lot of these loans that are very kind of well, and that's causing a lot of issues for people because we don't want to see what happened, I believe it was last year, happen again as far as the Silicon Valley Bank. And we obviously don't want to see, like we did in the last crash. So really, this is going to be a big thing because if banks start to topple over, that's going to cause a problem on the rest of the market. And obviously, it about time that something like that happens, given everything cycles. However, not something that we want to see, right? Ideally, you have a soft landing and we're able to negotiate and navigate everything so that way everything works really well. But I don't know, right? And so that's going to be really interesting to watch because now you have all of this debt that's going to be coming due. And what do we do with all of this debt that's coming due to be able to say, okay, we continue business. We aren't going to be losing a bunch of money for investors and the markets continue to kind of pump along. Now, if we have a little bit of a loss, not a big deal, right? But if you have kind of a loss, then yeah, because of course that's going to be a problem, right? And so you also see that commercial property prices are down already, so 20% down, right? So, for example, if you were to purchase a property at $10 million and that property is now worth $8 million, but you have a loan on the property, which you purchased for $10 million, and that loan, let's say, is $7 million. So, right now, you're still essentially going to be in a cash flow positive state, right? Not a cash flow positive state, but you'd be able to get rid of the property in a state where you will not lose money. You will not make any money, but you will not lose money, right? And so essentially, if you've been holding that property and that property is cash flow positive, then of course you're going to be okay. If that property is cash flow negative and now you sell for a loss or small loss or even just a break even, then that can cause problems, right? Because people now will start to panic, right? And so obviously, if you're not selling properties for a loss, not really a ton of panic. If you sell them for break even, I mean, you're going to see a shake in the market, but I don't think it's going to be huge. If you sell them for a little bit of a profit, I think that's going to signal to everybody that, okay, we're still fine. Right now, the problem becomes also that offer prices are starting to fall. So you have the 20%, which has already kind of come off of the property value, but then your offer prices are starting to fall. So those prices are falling, according to this article, by about 35%. And so because of that, you're seeing a little bit more of a decline as far as the property values are concerned, especially if these offers start to lock in and create purchases. That's going to set a new valuation for the market, right? And so based on that, you have a lot of these kind of if then around, right? And that's going to cause a lot of people to kind of be a little bit on top of that. You have 25% of office loans coming due in 2024. So a lot of really interesting things are going to start happening in the commercial real estate market, which is already kind of seeing a little bit of it. And so because of that, this is something that we do want to be looking at. And there's so many factors that play in: interest rates, sales, refinances, hybrid work, right? Work from home. These are all things that are playing into, especially in the office market, how things are going to work and how things are going to move forward with this market, and see, are we going to be losing more value in the commercial real estate sector? Or are we going to be, able to kind of this, pretty much just landing, so to speak. So it's going to be really interesting. We're going to keep you updated. If you like this video, thought there was some value, please hit that thumbs up, please hit that subscribe, and we'll see you on the next one. Take care.